if you want me to talk to you or to the entire. How many people are
Yeah,
there in the room?
I'm gonna go back to them. So I think what
I
we
see
were planning
seven.
for, yeah.
That is.
So what we planned for today is that you can have like a quick chat with them, some general talk, as we said before, and probably go onto the one-on-one with the four companies we decided, and then if we have time, we can have like a quick elevator pitch of 2 minutes each of the one that they have around.
Remind me, you have how many companies in the program right now?
It's better not to tell you because you're gonna be ashamed, but it's about 50 right now.
Well, no, it's like it's good that there's lots of them. I'm not gonna take it personal, but out of 50, there are only 17.
No, no, and this is something also that I need to tell you. The reason, one of the reasons why we're doing that is because there are some European funds money that they force us to go over
I think you mentioned
60.
that before.
Yeah. So this batch is a little bit overcrowded into that, but we allow a lot of the companies to be remotely also
I see.
managed. And so the ones that you're gonna have an interaction with, they are the ones that they've been most of the time with us here.
Cool.
Okay.
Um, Good. So, I mean, should I jump in and just, um, you guys can hear me?
So if you want, we can mute if you think when you
No,
talk.
I think it's okay. I mean, what I would ask also is, guys, feel free. I think I see you relatively well, so feel free to, if you want to interrupt and ask a question, if you just go like that, I'll just pause. Yeah, there you go.
Yeah.
Have something? Uh, and um, and we try to make it more interactive. I'm happy to do that. So I'll just spend a few minutes talking about what I've learned in terms of what helps start up with fundraising, and then actually, there is an echo. Can you try putting the mute on for a second, Rafa? If that helps.
I offer you that, and then
Yeah, it's not the noise, because I hear myself.
yeah. Sorry.
Yeah. Oh, yeah, that's better. You guys hear me okay? Okay, yeah, you can nod. That's good. But if somebody wants to ask a question, obviously I'll let Rafa. You can take out the mute. Wonderful. Thank you. So as I was saying, I'll just talk a little bit about fundraising, which is something that most startups find important, and I'll just touch on a few of the things that I have found that have been most useful for entrepreneurs just beyond fundraising. I don't know how much you know about me, but I'm from Venezuela. I'm math and computer science from MIT, MBA from Stanford. Started first web analytics company back in '94, and then between '94 and now, I've gone back and forth mostly between doing startups, helping create startups, kind of like as a founding board member, and doing angel investing and so on. Some of the companies that you might be more familiar with that I've been involved with include StumbleUpon, where I was the chairman, SlideShare, where I was in the board, BrightRoll, which we just recently sold to Yahoo, Optimizely, I'm an investor, Nextstack, Thumbtack, I'm an investor, Viki, Strava, I'm on the board, Freedom Financial, Instructables, Flixster, Mashery. Anyway, those are some of the companies. There's no unique theme. So I do have some hardware companies like Boosted Boards, and I have enterprise software like Kana Software, and I have software as a service like Optimizely, or advertising like AdMob. As long as I feel I can help out, as long as I like the founders and I'm excited about what they're doing, then I get involved. I don't do medical, and I don't do anything that's really deep tech that I don't understand. So let me just, with that, jump straight into, and I think, yeah, I don't know if I mentioned, I'm from Venezuela originally, so I can relate to being a foreigner here in Silicon Valley, although I should add that, for us, as anything outside that is not drivable from here, so if it's not between San Jose and San Francisco, it's considered foreign. So Sacramento or LA, it's as foreign as Malaga, as far as we're concerned. Sometimes foreign entrepreneurs are asking about, oh, Silicon Valley, we're coming from abroad. It's like, look, most people here in the Valley come from somewhere else, and if you came from Texas or Colorado or Spain, it's the same thing as far as we're concerned, or Venezuela, as it's in my case. And I'm not kidding. It's really the way it is. It's a very, very particular place. And you talk about Boston and New York, totally different places. And things, turns out, operate relatively differently. So let me jump into fundraising. How many of you are either fundraising or think you're going to be fundraising in the next 6 months? You want to show a hand here? Half of you might be fundraising. Okay. So I'm curious about the others. Maybe Rafa, you can chime in. So the others that are not thinking about fundraising, is it because they already they're already funded, or they're going to wait longer? Just trying to understand.
I'll unmute. I wish everybody has already funds into their companies, but they're looking for the best way of fundraising. To be honest with you, I think most of the companies that we have here, they're looking for traction first, because they realize that the best way of getting investors early into the company is to show traction. So yeah, some of them, that is the way we see how to fundraise in outside Silicon Valley, in the rest of the world, as you said.
Yeah, yeah, and what I will say again, my experience has been very Silicon Valley centric. I've mostly been here for the past 20+ years, and sure, I do have investments outside the Valley, but yeah, anything I say, you should assume it's primarily applicable here. So just a few thoughts on fundraising. The most important thing is the fit with who you're pitching. And so I would use a dating analogy. If you pick the wrong potential date or target date, it doesn't matter if you take her to a French restaurant, Italian restaurant, if you offer wine, if you give her a flower, if you wear the right or the wrong cologne. If there's no chemistry, you're wasting your time. I mean, on the other hand, if there's great chemistry, it doesn't matter. You can do a picnic in the car, and that's probably good enough. So with target investors, it's the same thing. The biggest mistake I see is entrepreneurs go and try to fundraise from the wrong people. So no matter how well they do it, nothing matters. You're wasting your time. On the other hand, if you got the right target, then you're halfway there. How do you get the right ones? Well, you got to do homework. You got to find out, well, who are the potential investors that have said things maybe in their blog, they have tweeted, they have done investments, they have been interviewed, and said things that imply that they're interested in your space, in your region, in the kind of things that you're doing. So I think that's pretty key. A few other pointers in terms of when you go pitch an investor. Remember, you're not selling your product or your service, you're selling your company, so don't confuse company pitches with product pitches. Very often I hear pitches and there's barely a mention of the unit economics or the distribution plan or things that are what make this a business rather than just a product. So don't forget those things. There are not that many things. It's not like often you have very little time. So I'm not suggesting you go deep into a 10-year financial model. But on the other hand, you do want to say, well, look, here are the unit economics. Here's how much it costs us to provide our product or service. Here's how much we make. Or look, here is roughly how many customers we can get and how much money we make with each customer. It's high-level things like that. Or here's how we get a customer. Here's how much it costs us. Here's a channel that we get. I wanted to touch on what Rafa said about traction. Traction obviously helps a huge amount. It's one of the things that helps the most. But fundraising is not about checking boxes. So, maybe if you go ask for a loan in a bank and they say, do you have enough credit? Check. Yeah, is there enough cash flow? Check. Are you in the right geographic? Check. And if you check all the boxes, they go, great, credit approved. But for investors, it's not like that. For investors, it's about getting them excited. And when an investor gets excited, it's like almost nothing else matters. So what that means, often, traction gets investors excited. So that's the connection. It's not that traction is important because that's a box that needs to be checked. It's that sometimes that's what gets investors excited. But investors can get excited for other reasons. Like they might think that you guys are the best entrepreneurs they've met. They really want to work with you. or they think their product is terrific, or they see the opportunity as being huge, or they have a personal relationship with that need, and they go, oh, I want this for myself. So it's about identifying the target investors and then trying to get them excited. Let me pause there for a second. Does that make sense? Any questions so far? No? Okay, thumbs up. So I'm not sharing my screen with you, but I have a little presentation that I'm using too. Now, what happens when you go pitch an investor and they don't get excited? Well, they rarely will say, sorry, I'm not excited. This kind of sounds kind of odd. They say, well, what kind of excuse can I give that it's hard to argue with? And they say, you're too early for me. Or, you know, we're just finishing raising our fund, or I want to see more traction, or show me this, or show me that. But in almost all the cases that I've seen, those are just excuses and not the real reason. So be very careful not to go try to solve that problem, because you didn't get them excited, and then they say, oh, you're too early. So let's make some progress. You go back. Well, you know, we want to see more traction with customers. You get the traction. You go back. But you know, it's sort of like you're never gonna get there, and you're wasting your time. So do try to find out, is there something that, because sometimes, let me use again another dating analogy, sometimes there's something that is preventing them from getting excited. You ask someone out on a date, and she's like, oh, you know, I'm sorry, but I'm really busy on Saturday. Oh, what about Sunday? Oh, Sunday, I gotta study. And you're trying to get this person on the date, and there's no way about it. And she's giving you some excuses, and you say, well, what's the real problem? No, she's not going to tell you. But let's suppose you know her friend, and you go to her friend and say, you know, Jane, I'm really trying to go out with her, and what's going on? She might say, look, here's what's going on. You have bad breath. You know, you know, every time you talk to her, she wants to run away. She's not going to tell you have bad breath, but, oh, okay, well, I can do something about that. So that happens a lot with investors. You go talk with, if you can go through a back channel, ideally somebody who made an intro and someone say, hey, can you try to get some feedback? They might come back to you and say, you know, these guys are clueless. I mean, this unit economics they're saying, they don't know what they're talking about. Or, you know what, I'm not that impressed with what they did, or I don't think the market is that compelling, or, you know, I think that they hired so-and-so who I know. Just try to find out what is it that they're not telling you, and then maybe you can do something about it. Another point I get asked a lot has to do with who to raise money from. You know, is it the angels? Is it the VCs? Is it the, you know, syndicates, et cetera, et cetera? It used to be a lot more black and white, but things have evolved where it's very, very gray. You have angels that become sophisticated, you have VCs that are not sophisticated. So the short answer is that it doesn't really matter. You try to find a person. So the priority is, how do I find an individual, whether that is an individual friend and family, that it's an individual investor, that is a person from a VC, is that a person from private equity? It doesn't really matter. Who are the individuals that are going to connect with you? And the other important point that I should say is, when somebody gets excited about working with you, for example, one of the things I often hear is like, oh, you know, this person from Sequoia or from Excel, but we only need $300,000 and they only write $3 million checks. That's not true. When somebody gets excited, they're going to find a way. And if they have to write you a $50,000 check, I've seen Sequoia write $50,000 check because they want in. So it's about getting the person that wants to work with you, and the rest of the things are, I think, pretty secondary. I mean, the flip side of that is the person is a lot more important than the firm. Great firms like Sequoia or Excel or Planet Protein have some amazing people, have some people that are not so great. On the other hand, some so-called second-tier firms, they might not be as famous, have some awesome people. So don't worry as much about the firm and try to find the individuals. Well, here's something that's particularly relevant about you guys, which is, and I don't know if you guys, any of you might at some point think of raising money in Silicon Valley. But the thing about Silicon Valley, as I said before, is everything outside the valley is foreign, and there's so much going on here that the bar is super high. Very little interest here for funding companies that are not here permanently. But and the reason is because there's so much here, most investors don't have to worry about it. But that's not the case anywhere else in the world, whether it's Boston, London, LA, you name it. In all of those places, investors invest outside that town. So I have found in general that unless you move here and are like base here, companies tend to do better off if they're not from here, fundraising in other parts of the world. Now, what I would say that could work is that suppose you assemble a round and it's anchored in Spain or in London or in Boston, and you get some traction, and then you identify, oh, here's a few people in Silicon Valley who really are close to our space. They've done investments that are related. They've said things. They have similar experiences. So then maybe once you're 80% of it done with your round, you go and say, hey, guys, why don't you come in and help us and participate? That seems to work really well. It also helps if you have the local validation. If you're a European company and you come to Silicon Valley with, look, the top European guys are backing us, that makes us feel a lot better than if you come here and say, well, we want you to invest. What about the local guys? No, we're not talking with them, or no, they're not interested, or no, they're backwards. That sometimes makes us feel like you don't have those who should know you the best are not backing you. And then final note on the fundraising front has to do with the vehicle. Do we do equity? Do we do a convertible note? Do we do a SAFE? And I know obviously Europe has different issues as they relate to tax treatment and so on. I know at least in the UK. The short answer is it mostly doesn't matter. I mean, I think it matters in edge cases. So sometimes people say, well, if things go south and the company goes under, I get more protection or less protection. Most investors don't care about that, and you shouldn't either. It's really not that big of a deal. And these days, it's not that different in terms of cost. It used to be that an equity round was more expensive. It's not really that much more expensive anymore. So, I mean, my belief is if you find investors, what do they want to do? And if they want to do any particular vehicle, as long as the high-level terms, you want to keep it simple, don't get complicated. And as long as the high-level terms are reasonable, then it doesn't matter a whole lot whether I'm doing a price round at $5 million, a convertible with a $5 million cap, a SAFE with a $5 million cap. It doesn't really matter. I mean, some people disagree, but I think they're getting too complicated over. The one thing I would say is if you do a convertible, you do need a cap. That's very important for your own protection because you want the investors trying to help you get the next valuation, the next round at the highest possible valuation. If you don't put a cap, in that entrepreneurs think that's a good thing for them. It's like, oh, they might have to pay higher later. Well, that's not good for you because then what's their motivation to help you? None. So just something to be careful about. Let me pause there.
Sorry, just a quick question about the SAFE. This is pretty new for us, and I can tell you in Europe, I think that was something that we found out from Y Combinator. Is it popular there? Because we are planning to do that and invest into the companies here in Europe using the SAFE.
I've seen it hasn't like taken over, and now all I see are SAFEs. I think it's somewhat popular. Some people do it. I think that your traditional either convertible note or equity round remain outside of Y Combinator. I think those remain still a little more popular. The SAFE is fine. If you ask me, I think it's just a little they're overthinking it. I mean, again, I think that a convertible is totally fine, and that those edge cases in which it could be problematic are just so rare that it's not worth worrying about them. But yeah, I mean, the SAFE, I mean, I've done a few. It's also okay. I don't particularly care. I mean, usually, again, the way I think it's important to think about this, startups have so much risk. There's so many things that can go wrong. And so you don't want to worry too much about the things that have the minor challenges. You want to focus about the big ones, like getting customers and getting traction, and then you want to set things up so that if things go well, you're in good shape, and not worry too much about those rare, the edge cases, if you will. So yeah, I don't think it matters a whole lot personally.
Yeah, the question why I was asking you that, it is because of the way SAFE is treated into the balance sheet of the company. And apparently it helps also the company not to go into some occasions where they try to have also like a soft loan, and they could be very close to bankruptcy, very close to a situation where you have you are putting the situation of the company very close to bankrupt. And that was one of the reasons why to go with the SAFE early rather than not doing a loan, a convertible loan or something like that. But
it's interesting. I don't think that there's a lot of thinking around that angle here, but I don't know outside the Valley. But here in the Valley, it's not really about that. I mean, I think most people here in the Valley are more focused on what happens when things take off. And then obviously some people are worried about the edge cases and making sure that the investors can. I mean, there's a little too much, if you ask me, from particularly the YC type of companies. Just too much. Let's protect the entrepreneur from crappy investors. But I personally think the way you protect yourself is not with documents, but with getting good investors. So if you have good investors, none of this really matters a whole lot. And if you have bad ones, they're going to find a way of messing with you no matter what paper you have. So,
okay, thank you for that.
So before I jump into, go ahead. No, I was going to say, so that's all I have for fundraising, and then I have just a few other slides on more broadly startup stuff. But I don't know if anyone else has any fundraising related question that you want to ask. No, I go on. Okay. Yeah, so I'll just say a few quick things, and then again I want to open up for questions or some one-on-ones. The first, and I probably should have started with this, is you cannot follow all the advice you get. You're gonna get, as you're in programs like Bolt and so on, you get lots of people. We come, we give you advice, and some of it is gonna be contradictory. And the fact that it's contradictory doesn't mean that it's wrong. It just means there's more than one way of doing things, and you have to find a way that works for you. So some of the things that I have said or will say are just not going to be a good fit for you, might not be right in your context. So just pick and choose, but make sure that if you're going to follow some advice that you understand the rationale. I mean, I sometimes find entrepreneurs doing something, and then, I remember I was on this board, and the CEO was doing something. I said, "Why are you doing this?" And she said, "Well, wait a minute. You told me to do this." And I went, "Hold on a second. That was 3 months ago on very different circumstances. Things have changed." So it was clear to me that she hadn't sort of like internalized why I was saying what I was saying. So just following the advice, even if it's more experienced people, is very risky. So just make sure when you hear advice, try to understand where it's coming from and push back and try to get to the bottom of it. Next one is, and this is, I think, less of an issue for you, but a lot of the companies I see, particularly here in the Valley, are obsessed with moving fast, and I think speed is overrated. Speed, many of the most successful companies that I've seen have taken their time, and it's so much more important to do things right and to get the right, product market fit, and to really iterate into something that's really working well, than to run like crazy, go fast. Most companies that fail do so because they run out of time. And they often run out of time because they're moving so fast, they're burning all their cash or their resources, and boom, they hit a wall. On the other hand, I see a lot of companies that succeed is just because the time is on their side, they take their time and so on. Now, don't get me wrong, I don't mean move slowly, go take siestas every day kind of thing, although that's a nice thing you guys can do in Spain. But you want to execute well, but focus on efficiency and going in the right direction over just moving too quickly. It is a myth that, and I think often I talk with entrepreneurs from outside the Valley, and they go like, "Oh my God, stumble upon, what an overnight success, blah blah blah." No, they were at it for like 5 years, and eventually things took off. Or whether it's, same thing could be said about many of the most successful companies. Sometimes things do take off really quickly, but it's rare, and it's rarely planned that way either. Yeah. Another one that another point I want to make has to do with risk, and how I think, somebody was asking a friend of mine about Silicon Valley and what encapsulates Silicon Valley, and I think that his answer was that here we're comfortable with risk, and we actually see risk as our friend, and we don't try to minimize risk by hedging our bets. So if we are a company, we don't try to say, well, I don't know if this product's going to work, so let me do 3 variations. Or if you're an employee or a person, you say, well, I don't know if this company's going to do well, so let me not join this, but like hedge my bets and do consulting for 3. What we like to do here is we go all out. We take a risk, and we mitigate the risk over time. So what does that mean? If you're a company, you try something. You try to quickly determine, is this working? If it's not working, you try something else. And if it's not working, you try something else. And every time you're doing it, you're going all out, you're taking a big risk, but you know that you're going to have more opportunities. And the same thing happens in terms of like employing yourself. You go into a company, maybe it doesn't work, well, then you go take another job. It doesn't work, you take another job. And so many of the most successful people have iterated themselves and have to attempt things multiple times. Each one time, it might seem crazy risky. Oh my God, that seems so risky. But when you put it in the context of, look, I'm going to be able to try this many times, then it becomes less risky. But the key is to do it over time rather than to try to hedge your bets at the same time, because then you don't do anything well. We're very, very keen on focus and on doing one thing but doing it really well. So I alluded to this before. I've been fortunate enough to have been involved with some of the big success stories in the Valley, whether it was Twitter or Yahoo or StumbleUpon or a few others. And I can tell you that, or Zappos, I can tell you that what the books and the blogs and the movies say, it's not the way things happen. But after it happens, you don't want to go back and say, whoa, we got so lucky, we had no idea. People don't like that. What you see and what you read about is revisionist history. But why is this important? It's important because the mistake I see many entrepreneurs make is they look at any of these examples and say, I'm going to do it the way Twitter did it. And you start emulating a piece of fiction that it's not the way things become successful. And no wonder it doesn't work. So just be very, very careful about looking at those success stories. And even, I tell you even hear the founders talk. And, our memories are very flexible. We end up believing what we say after the facts. And I think many of these founders and many of these stories now are reality for these people. But again, the way things tend to work is many of these successes started a lot smaller, started without as much of a big vision. They started with something that, oh, let's do this. Oh, look, that's working. Oh, let's try something else. Oh, that's working. Or, wow, let's try this, and all of a sudden things take off, and they don't even know why things are taking off, and just trying to catch up with it. So, takeaway is, don't think that you need this humongous vision. Just try to have something that is an incremental progress. And sure, you want to feel that as you make progress, you can grow and you can make something big. But don't obsess too much about, oh, if I don't have the way those founders or these founders had that big vision, I'm never going to make it, because it's usually not the way it went. My final slide here is has to do with what I call helping us help you. I think there are a lot of people here in Silicon Valley and around the world that I want to help entrepreneurs such as yourself. But you got to help us help you. And what does that mean is sometimes I might get somebody that says, hey, Ariel, I'm doing this and that startup. I'm looking for an investor. Can you have a suggestion? Well, I don't know. I mean, I don't know the startup as well as you do. I might not know off the top of my head who are the investors that might be a good fit. You're not really helping me. But contrast that with someone who says, hey, Ariel, I'm doing such and such startup. I think that this person, and this person could be good investors for us because of what I read on the blogs, because of where they invested. and I noticed that you work with this person here, you work with that person there. I put together some short emails. Do you mind forward this to them so that they get that through someone they know? Perfect. If I agree with what they're saying, I'll forward it. It takes me 30 seconds. It's more effective for them. It's more efficient for me. So just do your homework and make life. I mean, now you can take this even to the next level. I've had people who, in the process of trying to get me to help them, help me bring value added and share information with me that's valuable. So if, for example, they want to talk with someone and they show me that they understand their space very well, that they've done a lot of homework, that their conversation with this person is likely to be valuable for that person, not just a one-way street. That is also something very good. So that's it. With that, maybe I can just open it up to any other questions that you guys might have.
You guys, questions, or we move on?
Comments or histories?
Yes. When do you think is the right time to look for investment? Like, what size of the company would you recommend? How many sessions, maybe per month, or revenue that is required before looking for investment, or would be good to have?
There's no hard and fast.
Yeah.
So I've seen projects that raise money out of an idea. And I think projects that have a hard time after they have employees and revenues and so on. So obviously, the more progress you made, the better position you're going to be to raise money. But I don't think there's any such thing as being too early. It is, going back to my previous point, about finding the right investor. I mean, some investors only are later stage, so they're not comfortable with things that are really early. But there are others that are really early stage. I mean, take an example of a friend and family. If somebody's going to invest in you because he or she is your friend and your family, when it's too early? It's never too early, right? They just want to help you. Or if someone is a really seed investor. So you just have to find the right fit between who you're going after. And you have to analyze the trade-off between if more money is going to help you move faster, make more progress, then you might want to try to get the money. If, on the other hand, sometimes you feel like, investment is not what's going to help me move faster just yet. I still can bootstrap myself to the next milestone. Then maybe you wait. So that's the other thing you have to wait. You don't want to have a situation where you're waiting to make progress, but without the money, you can't make the progress. That's the last place you want to be. On the other hand, you don't want to go waste your time trying to raise money if that's hard, if you could be devoting that time to making a lot of progress. So it's very specific.
Okay, any other questions from you guys? Let's move on.
A good one.
Okay, Carlos.
Hi. Here in Spain, there are many investors that say that good startups don't look for investment. So the investors have to be looking for them. What do you think about that?
I think it's a little silly, to tell you the truth. I mean, the most successful companies in history that I can think of, the vast majority of them went out and looked for funding. I mean, whether it was Facebook or Google or Twitter or Yahoo, they all went and raised money. So the idea that, if you're looking for money, that's a problem, that is, I think that's silly. I mean, now what is true is that sometimes a company is doing really well, and I've been involved with these situations many times, and we don't need money, but then some investors are really excited and go, yes, take my money, I want to give you money. So then they have to give you money in really good terms. But the notion that, particularly for early stage, that the good ones are not looking for money, that's silly. I don't think that really makes any sense. I mean, I don't know, going back to my dating analogy, I mean, that's sort of like saying that if you're single, then I don't want to go with you. I only want to go with you if you already have someone else. It's like, look, I mean, you could be a great person and you, for a variety of reasons, not be dating anyone at that moment. So that doesn't mean that you might not be a great fit for me. So yeah, I think that's a little silly. But I will say, one thing, unfortunately, what I have found is that most investors outside Silicon Valley, definitely most investors in Europe, Latin America, are not sophisticated at all and don't really understand the way startups work and technology works. So it's a really tough one. They just have misinformation from all sort of places. So it's a tough one. So what sometimes helps is if you're getting someone who's an investor who's interested, maybe you try to say, well, can you get them to talk with someone who can educate them a little bit, someone from, like Rafa or someone who Rafa might know that can explain to them the way things are done in places like Silicon Valley.
Okay, thank you. We'll move on directly to the pitches. And so we have selected a few startups for you. We're going to be moving, so you will realize that things are going to be moving around us just for a second. But they're going to be sitting in a coach, which I think is much comfortable than the other one. So first of all, we have Quest Organizers, so you can have them. It's the company, 2 founders, so there are 3 employees around here. One from San Francisco, actually.
Yes.
Douglas, you were talking to him.
Yes, hi, Ariel.
So I just really understand the format. We have four projects.
Yeah, we're going to be having four companies. If we have time to do some more pitches, you let us know. Okay.
Well, let's start with that and see how we're doing. And again, my goal is just to be helpful. So whether you want to do a pitch and you want me to give you feedback on the pitch, or whether you guys want to go straight into specific questions, whatever you guys want to do, my only goal is to try to be helpful.
Okay, I think we'll probably start with the pitch, and then you can give us feedback on what you think should be our next move and what you think about our current situation.
Okay. So and we're setting aside like 10 minutes per team, is that right?
Yeah, a maximum of that. I mean, we can do much quicker than that.
Okay.
We'll have plenty of time, yeah. Go ahead.
All right, so I just wanted to start off by saying that we actually started in San Francisco, and the name Quest Organizer was created in the apartment that we were living in, which was actually in a garage. So we're doing Quest Organizer, which is a stopover meta search engine, which is the first of its kind, because what it does is, for example, if you're flying from San Francisco to Melbourne, we'll suggest 5 different destinations that you could visit on the way, and you can customize the amount of time you want to stay there and also the destination. So in total, it adds 2 extra destinations to every flight that you have planned. And this is going to be used for people who love to travel, or people who are looking for a round-the-world trip or an alternative, and also people who like flight deals. And oftentimes the price of the final itinerary is much cheaper than the round-trip price, because we connect non-partnered airlines as well as low-cost airlines. So it's a big opportunity, we think. And let's see, the market size is constantly growing. We've done research, and we think it's growing by 7% a year of the number of people that book flights. And also, it's a very big industry. As you know, Orbitz was recently bought for $1.3 billion. Let's see, for Traction, we launched our private beta on February 3rd, and we launched our live site on February 14th. And since then, we've had 3,000 sessions on our website and 17,000 page views. Ourselves, we have always traveled using this technique, and we're big fans of it. We actually thought of it while we were traveling in South America using the technique for 8 months, and we decided that it needs to be automated, as it used to take us around 3 days to find the perfect flight combination, and now it can be done in 4 minutes. For our revenue, we earn commission off of flights as well as hotels. And we have 2 partners, and let's see, for both of us, we both come from a business background. I have a degree in entrepreneurship from Syracuse, and also I've done different projects in the past in Python and other languages, and Ella as well has marketing experience.
And we have a programmer with us on the team who did the backend with us.
Yes, who focuses on Ruby on Rails and also database. And then we have a front-end designer as well.
Yeah, so we are 4 people now at the team.
Yes.
Yeah, so I think this is that's for Peach. If you have any questions or if you would like to know more about something.
Well, let me. We don't have a lot of time, so I'm just gonna jump and give you some feedback. So I think I understand what you're doing, and I was surprised that you didn't mention the recent lawsuit that was in which I forgot somebody who had a
yes, Skip Flag. We got some customers from that.
Yeah. So my reaction is, I think that obviously the travel space is big, but from what you mentioned, well, I don't know if the 7% that is growing is the whole travel space. The part that I think you didn't address, very important, is who are the people who want to do this specific type of travel? I mean, how many people are either interested in doing different destinations, doing these tours or whatever you call them, or to save the money? And also, it seems like there are 2 separate motivations. Is it about the money saving, or is it about visiting other places? We usually it's good if one thing and that's the focus, and the other one is kind of side benefit. So any kind of evidence that you have that says, well, look, people, so many percentage of the travelers, or so many million people, or we've done some surveys that show that if people could visit other places on their way without having to spend more money, or on top of that they would save money, they would do it. So just saying, Orbitz is $1 billion company, that doesn't. I don't think that's compelling enough, because you're going after like a small subset of that. So I think that would be important. It'd be important to give me a sense of, for example, I already know there's somebody else who got sued for doing this. Why are you guys gonna? What's defensible? I mean, what are you doing that's special, that's unique, that's difficult? I mean, people like to fund companies that are doing things that are not easy to replicate. So, yeah, what is there, in terms of your back end, your technology, your know-how, that it's a lot better, that makes it hard, would make it hard for some of the other players to do it as well. The business model is straightforward. Yeah, you're helping buy tickets, so that part is easy. The distribution, I didn't get a sense for. Okay, well, how are you going to get customers? It would be nice if you say something like, look, our typical customer is spending $1,000 in tickets, and all that we make this many dollars. So we've been testing search engine marketing, and we can acquire them for less than that, or just a little bit of the unit economics that show factoring in customer acquisition. You didn't say how you're going to get it. Now you could say, well, it's going to be viral, word of mouth, blah blah, but everybody can say that. So unless you see some evidence that that's really happening, something compelling, that's hard. You share some statistics about traction, and you mentioned session. It was very technical, like this many sessions, this many people, and it was also very static. Usually, it's great if you can. More important than absolute numbers is momentum and growth. And so if you say, well, we've been live for this many months, or we've been testing this, and every week, more people tell their friends than the week before. So there's some indications that this is really resonating, that people are engaged, that this really could be big, helpful. Yeah, let me pause there, because I've been throwing a lot at that. Again, I'm just trying to quickly give you a sense of what are the kind of things that would think could make the pitch compelling.
Yes, thank you. very good tips.
Yes.
Yes, I wanted to mention also with the lawsuit that you're referring to, that's with Skiplag, and what they were doing is they were having people exit during the stopover, and so they would book the full flight and get out before they take the final leg of the trip. But what we're doing is we're combining multiple one-way flights, so we're doing something that is legal and we won't have a lawsuit on our hands.
Well, so I think that's great. I mean, and if I were you and you're giving a pitch, you might say, you might have seen in the news that so and so and so actually went to the trouble of suing these guys, and these guys were getting growth, but and that shows people's interest in willingness to do this. But the way they were doing it was illegal. We're doing it in a way that is fully legal. And by the way, we are not just focused on the money saving. We're doing it in a way that also improves the experience. So it's showing that there's activity in this space and that you're doing it better, I think would be helpful.
Okay. And I wanted to ask if you had any advice on us entering a new market like this, that we may be the first people doing this. We haven't found any evidence of anyone else who has tried. Do you recommend us getting some intellectual property rights for this type of concept, or is it just that we should rush a little bit to the market, or what would you recommend?
I think that trying to get IP protection for something like this and given your situation would be pretty tough, and I don't think that I would waste too many cycles on that. I mean, if you were, if you're already funded, and yeah, so I don't think I would go that route. I think that's a bit of a stretch. I think I would try to, it's not about running, but it's about, if you're executing well and you have a great product and people are trying you and liking it, so then I would try to build a brand around it, so that I think a brand could be the most defensible thing you have, a combination of a brand, a good experience. Are there some partnerships that you can put in place? So I would focus more on the business side in terms of protection, rather than, this doesn't strike me like one where the IP would really work, at least in my opinion. I don't hear you.
Sorry. It was muted.
Yeah. Okay.
Go ahead.
So I wanted to ask, do you think it would be good for us at this point to try to get some investment just to be able to develop faster and just have more users and just be a bigger player?
Say that you could, with a little bit of money, you could grow faster, maybe because you have someone you want to hire, but you can't afford him or her unless you raise some money. And then again, the question is, can you find the investors without spending too many cycles on that? So it's a trade-off of spending the cycles looking for the investors, spending the cycle moving the business forward. It sounds like it would be reasonable for you to try to raise some money and find a investor.
Mm-hmm. Okay.
Cool.
Nice.
All right.
Thank you.
Thank you very much.
Okay.
So let's move to a French team from Belgium. So if you speak French and if you want to be speaking French with them, it's going to be great. Otherwise,
I don't.
No.
Hello, Ariel.
Hi.
There are 4 of us. They are coming. Oh. So, here's the founding team from Belgium, and here is our German intern. So he's working on growth with me at the moment. Okay, so basically, I think we'll do the pitch and try to get you excited and get your feedback again.
Yeah, again, just the focus is for me to try to give you feedback, do something, tell you something that's helpful. So just use it as a way of getting my feedback, not to try to get me excited.
Okay, good. Okay, well, so Speaky is a new way to learn languages. Oh, can you keep the focus on him? Yeah. Because that's kind of weird.
They don't want to see themselves.
Yeah, it's better. Okay. So Speaky is a new way to learn languages online. So we are in the digital language learning industry, which is worth 4 billion and which is growing faster at 1 billion per year at the moment. The reason for that is that 95% of the people are still learning languages offline, and there is a huge switch in the market at the moment. So we started working full-time as a team on the 1st of September, and we launched our MVP on the 1st of October, so only 1 month after that, to test our hypothesis. Everything went pretty good from that, since we integrated the accelerator. We launched our mobile app to test if there was some traction over there. There was. So right now we are moving at 60% growth per month for the past 4 months. We have 10,000 users registered, and yeah, 250 per day at the moment. So it's growing pretty good. Yeah. So the Speaky, well, the problem we're trying to solve at the moment is that it's really painful to find a language partner online at the moment and to actually practice with him. So you have to go through a video chat such as Skype, which is not convenient. It's not the best way to build a network. So what we do is that we provide a matchmaking algorithm based on your interest and passion, so that you can find the right language partner for you. We provide all the integrated tools such as chat and video chat, both on desktop and mobile, so that you can practice on the go. And we also provide language learning oriented tools so that you can practice in the best environment. So our team is 3 engineers, 2 technical, and I'm focusing on growth. We are really extremely hard workers, so we turn on the light at the office here every day. We are really passionate about what we do, and we are really ambitious about what we do, because we think this could really change the way people learn languages on a worldwide scale. And yeah, of course, we are full life committed, so right now our life is really committed to this. We are actually at the moment raising 160K. To hire 2 developers, especially for mobile devices, because we know that's the future. That's our user want at the moment, both on iOS and Android, and to keep the focus on growing the user base. Right now, we don't monetize the platform, since we are really focusing on growth, and we have planned to integrate premium features over November. So yeah, that's pretty much it.
Cool. Thanks. No, I mean it's a good space. I'm somewhat familiar with it. I've seen a bunch of projects in it. So and I agree it's an interesting opportunity and a big one. Let me just try to give you a little bit of feedback. And again, you did a great job being brief. So and there's only so many things you can say. I think that you start by saying how there's a need for leveraging technology to do the language. You might want to touch on, I mean, you don't want to go into a deep, well, here's what this guy and some of the other players, but there are a bunch of other players. So maybe without getting into too many details, you might want to say, well, there are guys that do mobile video-to-video learning, but they are too expensive. There are guys that do web-based matching, but they are too crappy. I mean, what is it that you almost made it sound like there's nobody else doing this, but that's not the case. There's a bunch of other people doing it. So without necessarily spending too much time educating your audience about the competition, I think it would be important to say, look, we looked at this, we think it's an opportunity. Maybe you're doing the same thing as others, but you're just saying there's room for more players. But I think it's usually nice to say, what is the specific angle? What's the twist? So we're doing this, and what's really good about us is that it's a marketplace, it's peer-to-peer, rather than me charging you to match you with a specific language person, or is it more about the video? Is it more? So I think it'd be important to just give a little more form to exactly what your focus is. So that would be one thing. The other thing, I mean, I think it's fine that you're not monetizing early on. That's not a problem. But I think you do want to give a little more color into how exactly you mentioned, oh, we'll do some premium features. To me, that was just a little not compelling enough. So I think ideally you want to say, currently the service is free. We believe that we're going to do one with premium features such as X, Y, Z. Maybe you mention which are those, and that people will be willing to pay on average this many dollars a month or this many dollars per session, or just give a sense of roughly what is it that you're going to do, how much are people going to pay, what percentage. You say, well, we think, based on industry standards, we think that we could get 5% of our audience to pay, on average this much, so we're talking about a target opportunity of, give me a sense of how this could grow, because it's not, and I will say this just knowing a little bit about the space, which is you have on the one end of the spectrum very expensive solutions, and then on the other end of the spectrum free solutions, and it's not slam dunk that you can find the right balance in the middle. So I think it'd be good to kind of show, and if you have, even better if you have any kind of data that shows, we already have thousands of users, and we're asking, we realize we have this trial that says, would you want the premium, or would you want the expert or the real time, or whatever is the functionality you're going to give, and we're getting a lot of interest, 10% of people are clicking, so give me a little more sense, more validation that's really gonna go there, particularly because there are other players, so it's not like you're the only game in town. I think it would be good to understand your audience a little bit better. I didn't hear anything about, are you trying to help the Chinese learn English? Are you trying to learn the Americans learn Spanish? I mean, who is this? I mean, the language space is very large. And there's lots of different,
so basically, it's language exchange. So I don't know if you're familiar with that.
But I teach you some Spanish and you teach me some French.
Yeah, exactly. So what we do is the matchmaking between those people, and also because there are many people from India, Arabic country and stuff, we allow them to meet just to practice the language, even though they are not native, because there is a huge demand to practice the language, but it's not easy for them to find the right partner all the time. When you speak Arabic, it's hard to find a native English speaker who wants to speak Arabic with you. So yeah, we also provide the matchmaking between people from all around the world to actually just practice that language on speaking. It's all free. This part actually is all free on the website.
Yeah, so when you're doing a marketplace like that, often the biggest challenge is liquidity and balancing. Do you have enough people? Is there a balance between supply and demand of the various languages, or do you end up with a lot more people who want to practice English than people who want to practice Arabic, and then how do you deal with that? So I think that's something that, again, if it's a 3-minute pitch, you might not have time to cover it, but it would be one of the first things. If I was an investor who seriously considered putting money into your business, that'd be one of the first things that I want to, show me exactly how this scales, and my guess would be that when you're really early, you might have all sort of like the Arabic here and the Brazilian there, and that's not going to scale. That, in my experience, these kind of things, you end up going to, look, we are focused on the Chinese learning English, or something like that. And if that's not the plan, you really have to make a compelling case of how that works, and how that works in a way that's monetizable and that gives people a really good experience. Those two things are obviously pretty key. Go ahead.
So to answer your question, we are mainly focused on the language we know, which is English, French, and Spanish. That's it. It's just that we got some people, I don't know how they found out about the website, but too many people asking, I want to be on the website, and so we introduced 113 languages so that people can actually match. But what is actually scaling at the moment is the English, the French, and the Spanish.
Okay. Yeah. So so those are the kind of things that you want to. I would say it's actually better. Having lots of languages is not necessarily a good thing. In the sense that I think most investors prefer to see a focus and attraction, and you say, look, it's scaling because there's a good balance of the people who want to learn the Spanish who want to practice French, and the French who want to practice Spanish, and so on, and then shows the numbers. Look, here's how this could grow over time, and so on. I didn't hear a whole lot on the marketing front. You mentioned we're growing, and you mentioned you're adding a few hundred persons a day, which is obviously a really great thing. Although at one point you said you're growing some percentage, if I don't recall, every month, but then you had a flat number every day. So the two things, I think it was semantics, but you just want to make sure you don't those two things are reconciled. So you're up to 250 and growing per day if you're really growing more every month. Yeah, I mean, it'd be helpful if you can talk about how exactly that growth, you're going to sustain that growth. It's one thing to grow when you're really tiny. It's something else to grow when you have hundreds of thousands of people. So, you want to try to address some of your thoughts and plans of how do you maintain that, how do you sustain that, what are the kind of things maybe you're seeing that will that give you confidence that will be doable down the road. And also, I made the same comment, I think, to the previous team, that from a unit economic standpoint, you want to say, look, we can acquire our customers for X number of dollars, and we make Y number of dollars on average, so this whole thing kind of like adds up. That's what comes to mind, and I think we might need to move on, but it's cool. It's a good space. I think I was doing something similar for another incubator. I think it's a Rockstar incubator, and there was I think it's a Dutch company doing something similar. Do you know the one I'm talking about?
Coffee Strap.
That one, yeah.
Yeah, actually, they are really far behind right now, and they started a year before, so it's okay. We're not really worried.
No, ouch. Okay, well, good luck, guys.
Thank you.
Thank you.
Bye.
Thank you. Okay, we're moving on to Ventafan. You can do it in Spanish or whatever you feel.
Actually, I feel more comfortable in English.
Okay, do it in English.
Give me 1 second. Hey, just give me 1 second. All right, ready for you.
Hi, Ariel. How you doing?
I'm good. How are you?
Good, thanks. My name is Carlos. As Rafa told you, I'm one of the co-founders of Ventafan. And what Ventafan does is, we allow people to share their love about some products or services and get paid for that. Our market are mainly B2B and B2C. So on one hand, we have many small, medium enterprises with limited marketing budget, and they have really a pain to gain some customers on board. And on the other hand, we have here in Spain 20% of unemployment rate, and many people that are really keen to earn money. We started getting subscribers for our beta launch 2 months ago, and we have 50 companies and 150 users that are waiting for our beta that we are releasing this week. How does it work? So basically, the companies publish at Ventafan the services and products they want to sell. Now, any user at Ventafan finds out the product or service and spread the word to their friends, family, and so on Facebook, on Twitter, on LinkedIn, via email, whatever. And then from those word-of-mouth referrals, there are some deals. And from those deals, the people that actually made the referral gets paid. Our revenue model is based on 2 things. The commission out of every deal and premium features. When I'm talking about premium features, I'm referring to basically to have publicity within the platform. So you can be on the top, like, on Google AdWords, so the same. And as well, we allow 3 products to be published at Ventafan free of charge. If you want more products, you have to pay more money to publish them. The team is formed by 3 people. Rafa, my friend for already 4 years. He is the CEO and the responsible for the front end. This is his second startup, and he was working previously at Oracle. And Pablo, he is the back end responsible, and he was working at Air Europa, and this is as well his second startup. And myself, I have 5 years of experience in sales and marketing roles, and I'm focusing right now on everything related to the growth, the marketing, all the content, and so on. What are we looking for? We are looking to get the product market fit and the traction, and then we will be interested in hearing and meeting investors with B2B, B2C knowledge and contacts, and obviously a person like you, which has who are chairman for Texmark, is really interesting for us, since you actually have this amazing SMS huge application. So for us to be able to deliver the offers through a platform like that will be really interesting. In terms of exit strategy, we think two possible ways: either way to go public, or to be acquired or merged by a bigger player.
Okay. All right. Let me jump and give you some feedback then. So, I mean, the first thing I would say is you start talking about the company, but it's not entirely clear what the product does, what it is. So you talk B2B, B2C, which, by the way, is there anything other than B2B or B2C? I mean, that's kind of like if you're a B2B, you might want to say it. If you're a B2C, you might want to say it. If you're both, well, it's not really a good thing. It makes it harder. It makes it like lack of focus. So I would not even say anything, because all it does is it makes me think, wait a minute, what are these guys? So back to my main point is, I think you need to find a way of crisply describing at the very beginning of your pitch, what is it that you're doing? So you might want to say something like, we are a referral platform that allows consumers to tell their friends about products and services and make money in doing so. Or whatever is like, so that immediately okay, I understand. Because otherwise you start talking about other stuff and I'm still going like, well, what the heck these guys do? You're talking about unemployment and about this and that. I'm like, well, why is that relevant? So start by saying, what is it that you do? You do have a big challenge, which is you have to go get the consumers, you have to get the businesses. That's not a good thing. I mean, usually startups have a hard enough time getting one of those two things. You have to get both. So you want to either acknowledge that, or you want to say, well, how do you get, where do you start? Where do you get the traction first with the businesses, and that helps you get the consumers, or the other way around? And how do you do that? How do you really prime the pump or create some artificial liquidity in your system? I think there are other somewhat similar type of products and services out there. I mean, isn't there a lot of stuff that is somewhat related out there? I mean, so the other thing would be maybe talking about, well, there are a bunch of things, but here's what we do that's unique or that's special. I'm hearing and going like, I think there are like 10 other companies like this. What is it that you guys are doing that's new and innovative, or is there? So that wasn't clear to me, but I've definitely heard of related kind of things. So didn't quite understand what was the angle or the twist, or maybe you're saying, well, look, there's a certain company being very successful in the U.S. doing this, and we're gonna focus on Spain, on Europe. I don't know, but I would want to hear what is it that you bring to the table that's different.
Actually, you're completely right. I completely forgot to tell you. There is one company in New York which has been working very similar to us for 3 years, Local Maven, and the thing why I think they didn't grow, because they are only in New York. I mean, after 3 years, if you didn't expand, it's because there is some issue. And is because they lack urgency for sales. I mean, you can post your offer there forever, you know. So people, okay, I can see this here for months and months and months. So and what we do different from them is that we implement urgency in every single of the processes from the sales part. So if you're a salesman, you actually get notification that you are losing money every single day because of the lack of urgency. So you earn more commission the first day, the second day less commission, and it decreases until the last day you can sell it, and you can sell it only for 1 month.
Are you still there?
Se ha perdido.
Sure. It doesn't show that it's. Yeah, it's frozen. Yeah. Let's see. Yeah.
Cuelga y llámame de nuevo.
Ya, el problema es que no se jodería la misión. Ese es el problema. No lo podemos llevar por otro lado. Ahí está desconectado.
Ha perdido internet.
Ya. Espero no ser yo.
Charo.
No soy yo. Vale, vamos a ver si conseguimos que se conecte. Lo siento, de verdad.
Sí. Es más, tío, yo de hecho llevo dándole vuelta al Twitter Pitch 3 meses.
Pero nunca se llega al final tanto. Porque te han escuchado tanto que más grande. Es bueno que todavía.
Sí. Si no, yo lo aprecio.
Okay.